All right, everyone. Hope you guys had a great week. I'm going to start this video off by first admitting to my own little mistake here regarding the CPI data. So I was going into this week and said, no, I can't see the CPI coming down, under 8%. So our prediction was high 8.4, 8.5. And guess what, folks? CPI came in, core and CPI came below estimates, and the market rallied hard on Thursday. Dow pops 1,200 points in a single day. S&P 5 jumps 5%, the biggest rally in 2 years after inflation report at 7.7. And that triggered a rally for the last 2 days. And it looks like so far that we're going to continue. All right. I'm going to jump into this chart first, and we'll start moving through the Qs and the techs and the spies and all that. Some of my favorite tickers that we trade. If you look at this percentage of S&P 500 stocks over the 200-day average, this was what we looked like in 2018 before we took another major dip here. Okay. This is what it looked like during COVID. And this is currently the now situation. We are over 50% of S&P 500 stocks over 200-day moving average. And this pattern is starting to look like this, right? A little cup and handle here, and then boom, over 50%. So this is, I'm not, the purpose of this video is not to, tell you that I think the bear market is rally is, or the bear market is over. I don't think it is. I mean, there's not enough evidence to suggest. However, the run up that we had in NASDAQ and the Dow and the S&P 500 was actually comparable to March 2020 lows or March 2020 run-ups. Okay, so it's convincing rally for sure, and we'll take a look at the charts to see where we are off to next. As you know, in our group, we don't trade the macros. Okay, we trade what's in front of us. We look at the indicators. We trade the day. All right, but this is more of a macro type of video. So with that being said, it's just a hell of a rally. It's a face ripping rally. You can call it a short cover rally. Are we overextending a little bit? Is inflation 7.7? Is 7.7, if you think about it, it's still high, right? It's still high. It's well above what the Fed wants, right? But it came in well below estimates. And this is part of the reason why the markets have run up. If we look at the future fund rate, all right, we have an 85.4% chance, all right, that the odds of the Feds hiking another 50 basis points, not 75, but 50. And that signals a potential pivot in the market. All right. And this is where I do believe that the market's risk on right now. Everybody's just kind of, for lack of a better word, FOMO, right? Buying into stocks, buying into the options. Okay. Looking at potentially the bottom is in. All right. But before we go all that, we'll look at the charts, but 85% chance of a 50 basis points, and that could signal potential pivot. Now, the interesting thing is, ladies and gentlemen, we do have another set of data coming out in about a month from now, which is the December 13th. Mark your calendar, December 13th. We're going to see another CPI print, okay? And December 14th will be at the next FOMC rate decision, okay? And I bet your bottom dollar that they're going to use the December data to kind of, gauge if they should be really doing 50 basis points or would they be going 75 basis points. The market at this time believes it's going to be 50 basis points. If the CPI comes in a little bit under 7.7 come next month, you're going to see a big rally. Now, a couple of things going into this week before I jump into the charts. Okay, next Tuesday, we do have the PPI data coming out at 8:30 a.m. All right, so this is going to be important. Why? Because this is the producer price index. All right, so the PPI at the last reading was 8.3. Generally speaking, well, actually, quick reminder: in October they released PPI before CPI. Okay, and then the day before, actually, right? If you look at the Q charts, this was the day on October 12th, right? They released the PPI data and it was kind of mute. There was no action that day. All right. And the next day, the CPI data came out, and we had a rip, a face ripping rally because it was actually 8.2, so it wasn't terrible. And so the market thought, hey, let's go ahead and buy the dip, right? All right. So that's what happened last month. So, but this coming PPI data going into November here, it's forecasted to be 8.3. Okay, it's likely that we're going to see if CPI is under 7.7, this is going to come in pretty low, and this could trigger another set of rally next Tuesday. Okay. Unless the market, of course, prices in everything at this point. I think at this point, the market is pricing in a low PPI coming up on Tuesday. We do have Fed speakers next week. Other things that's in the calendar, we do have Walmart reporting. So consumer retail, consumer staples are reporting next week, starting with Walmart, Target. I do believe like Kohl's and et cetera, et cetera. So that's so quite a busy week next week as well. So with that being said, let's just go ahead and start over on the weekly chart on the Qs. We'll move into the SPYs and all the text. All right, here on the Q weekly chart, you have a bullish engulfing candlestick with very much good volume. Okay, volume really to me speaks about the price action. Is it legit? Is it real? And we can tell it is, because this week's volume, even with the Veterans Day today, even though it was a holiday today, the volume was above the 20-day simple moving average. All right, this volume looks a lot like back here. All right, or this candlestick here. Okay. So we did move above the 20-day. All right, this is a 20-day here. Above here, this is where the 200-day on the weekly. All right, we did have a death cross here. I believe this is the 100. Sorry, this is the 100, and this is the 50 here. Okay, so I'm not going to speak to weekly targets here, but certainly 292 is going to be a resistance going into next week, which happens to be also a moving average on the daily. So let's go ahead and move into the daily here. The 292 represents the 100-day moving average here. All right. So we're well above the 20, the 50, and here's the 100. And it seems so far that the market is going to continue to push up. All right. We have two white soldiers so far. You may get a third on Monday. I do see that the market's momentum is strong here. We blew past the 50 MA pretty quickly on Thursday. All right. We didn't even look back. Not even a retracement, guys. Not even a pullback. It just went forward. And today's high was 288. All right. As predicted and forecasted on our yesterday's video. But now let's see what happens. I'm going to put an upside target of 292. That's the 100-day. All right. When if things hit that major moving average, you got to expect a pullback. So I do expect it to pull back after we see the 292. If the PPI data comes in soft, I do think we're going to move directly above that, past this volume gap here. And we may eventually, ladies and gentlemen, I know this is bold. All right. This is a bold call right here. I do think if the PPI data is soft, we will eventually end up in the 300s at some point late next week. So this is going to be a target of mine for the Qs at the end of the week, right about the 303 area. But we have to hop over 292. Good PPI data should send us here. Now, what is the downside? Bad news. Okay. SPY hitting a 200 moving day. Maybe we'll take a look at that. But certainly a pullback is needed. I do think that you have excellent support at the 281 and 280 area. And this is where you can see a potential pullback. All right. Something like this, maybe, once we start off Monday, hey, things need to cool down. We pull back to the 280 area before testing the 290 area again. All right. So that's my call for next week. Once we break this, I do think we're going to see the 300s rather quickly. The volume, not as good today, but it's a veterans holiday, so I'm just going to skip that. But you see the volume yesterday was just tremendous and almost matched the volume back on October 13th here. All right. So 281, pullback, 292, 303 is the prediction or the forecast going into next week. Let's go ahead and move on to SPY, the S&P 500 ETF here. Okay. We moved across on the weekly. We closed above the 200 day. You still got a death cross here, but that's okay. It looks like it's totally ignoring that. But yeah, it looks like SPY is almost tapped 400 today, 398, 399. We're almost there, and that's going to be a potential resistance. That's a big psychological resistance, right? It's like Q hitting 300. It's going to be a psychological resistance. So I'm going to put an upside target, all right, of 407 next week. PPI data, good. Markets continue to rally here. We got gaps to fill. All right. I totally understand. We got a gap here to fill. All right. Unless some type of bad news comes out, and you never know in this market, right? We could fill that gap. But immediately up here, we got some gaps that are relatively close to getting filled. And first one would be above the 403 area. All right. And we could fill this gap to the 407 area, which happens to just correlate with the moving average 100 here. So, how interesting is that? All right. So, we got a gap to fill here. And there's still a small gap here, but that's like the 420 range. And I'm not going to go there just yet. But I'm going to say that we have room on the SPY to hit this 407 target. All right. It's going to take a little bit to bounce over that 400 area, but if the market remains hot and the buyers are still coming in, we can see this 407 target hit next week. Something to keep in mind, something to just watch. Look at Meta. Look at Meta out just, ripping shorts and trying to fill this gap. We have a gap to the 128, and we're still here. We're about the 114, 115 range here. I do think that gap eventually is going to fill. The big news this week was that Meta is laying off 11,000 of their workforce. Okay. So that's going to mean significant savings and cash flow improvements going into fiscal year 2023. So you have a big gap here. So I'm not going to put any, I don't usually trade the Metas. It's just not my kind of thing, but that gap could get filled pretty quickly. I mean, we closed rather quickly, even with this drop. All right, that we closed under the right above the moving average 20 on the Meta. The only thing about Meta is that even with all the volume that we've seen on Q and SPYs, you're still seeing lower volume on this run up. So I would be careful here too. So there could be a pullback. Amazon, Google outperforming this week as well, coming for that dip here. I'm sorry, coming for that gap here from their earnings a couple of weeks ago, right? We got it. We're entering that gap potentially. If we hop over 104, which is the moving average 20, you're going to see this gap fill. Okay. And Amazon actually closed above 100 today. Look at that. All right. So let's put an upside target of Amazon to watch here. 104 next week. We're going to put a 104 target for next week on the Amazon as long as the markets cooperate and give us a continued strong trend. Potentially another three white soldier type of situation before another pullback. But 100 is that hurdle, right? That you got to get over. Once that 100 is broken, it becomes support. Okay. So if we can come up into the 104 area, this gap could fill, all right, but certainly there's going to be some resistance because this is the moving average 20. All right, I'm going to go ahead and move on. I'm moving rather quickly here, so stay with me here. All right, Google. All right, Google. Got a gap down here, but look at this. You got more gaps to fill up here with Google. If it can hop over 96. It tried today, not really, but we hit about 97. All right, but 98 and above, you start filling this gap to the 102, 103 area. So again, I'm going to put my target for Google here right at the top of that resistance candle here, and that'll be approximately 98.50s. Okay, for Google going into next week. And how can we not talk about tech and not talk about the Apple? All right. From this perspective, hold on, let me resume this. Okay, this area held big time. I mean, the bulls just continued to step in at the 130 area, and we saw that here on October 13th with a run up, and we came back to test that 134 again and ran up. Okay, so Apple, I do believe, hit 150 today. Yes, it did. It hit 150, and it's now 149.40 in the after hours here. I do believe that Apple will eventually move over to 150 area, okay, as long as the market cooperates. So I'm going to put an upside target. We got to get over 152, Okay, that's the wrong line here. And I apologize for the background noise. I'm unfortunately recording at a bad time here with the gardeners, etc. Okay, so right here, I'm going to put target of 152. That's always been the support breakdown kind of area. If we can break that, I do think you're going to eventually see 157 again on the Apple. All right. So that is, and one more. I'm thinking one more. I got to go over, and let's go back to Tesla. Tesla this week has dramatically. I mean, over the last couple of weeks, you saw Tesla pull back pretty heavily down into 176 held. Okay, we still have gaps down here. All right, compared to most of the other charts. Okay, this is still a little bit more bearish side for me, but the good thing about Tesla, if you are a Tesla bull, is that it definitely hopped over, all right, the prior support, which became resistance on Thursday, all right, and now should become support. So watch for this pullback back to the 190 area. I do think that Tesla will try to hit 200 again, or even try to run back towards the moving average 200 here. So Tesla, pretty good volume day as well. If you look at the volume here, not terrible for a Veterans Day. If you look at Q and SPY, where the volume was less, Tesla was pretty significant. All right. So, with that being said, I think I'm done here. I hope you guys are taking advantage of the market conditions here. You know, if you are a macro bear, if you believe that hey, inflation's not getting any better, we have uh, more issues abroad and etc. Yeah, I do get that. I do actually very much consider all the macros. Okay, but if something is pivoting, you can't keep buying puts, right? You can't be, you don't be stuck in a mindset where you just have to be a bear every single day. We've done that. I've done that, right? And I've bought into the whole macro picture. And you know what? It didn't serve me well. It doesn't serve you well to pick tops. It doesn't serve you well to pick bottoms because either way, even if you got it right, you're still not making money. All right. So just keep that in your mind going into next week because the market can absolutely stay irrational longer than you can stay solvent. Right. Okay. So once again, hope you guys had a great week. It's been a great week for me. Blessed. All right. So if just to reiterate, okay, we got PPI data next week. We got some earnings on retail. 292 is my target for the Qs. And looking at the weekly chart here, this bullish engulfing candlestick is very hard to ignore. All right. So with that being said, I'll see you guys.